Ronald O'Hanley is the chief executive of State Street. He joins me now from Boston in Massachusetts. Good to have you, sir. Thank you for excuse me. Thank you for taking the time. The way the Fed put it today, tapering is not on the table yet. It's going to happen. You know it's going to happen. I know it's going to happen, but we're not talking about it yet. Is that sufficient for you?
Well, first of all, Richard, it's good to be here. And secondly, as your prior guest just said, this is a balancing act that the Fed is trying to strike here. And I think it really is about the labor markets. And we've in this very unusual situation where high unemployment and a high number of unfilled jobs. And the clearing rate is actually very low. And I think the belief of the Fed is that they need to get that labor market back up and running properly, get employment at a much higher level, and as long as inflation remains transitory and doesn't get baked into wages, which evidently what the Fed is seeing is not seeing any evidence that it's being baked into wages, I think they're going to stay the course.
Have a listen, sir, if you will. Yesterday on this program, we had the managing director of the IMF. We were talking about tapering because they've just brought out, of course, the IMF has its biannual or 6-monthly, I should say, World Economic Outlook. Have a listen to what the MD said on this question of tapering and the wider ramifications that will happen.
What we are seeing is already the Fed is contemplating that there may be an acceleration of withdrawal of this massive support. When this tightening of financial conditions happen, we might see a second shoe to drop. We may see countries with high level of debt, especially dollar-denominated debt, in a very difficult condition.
So arguably the same can be said for many in the investment community. Once the rates or once the tapering begins and the process starts, are you worried the markets will become dislocated?
I think there is some reason to believe that. And what was interesting in the Fed statement today is it didn't get a lot of notice yet, but the creation of these two new repo facilities. And at least one of them, I believe, is intended to help manage any kind of disruption that might occur in there. So I think they're getting ready, but I don't think there was at all, at least what I read and heard, any signal as to timing yet.
If we actually look at the economy, what's your gut feeling telling you? The market, and I ask that because, of course, the market is a completely different beast than what is happening in the real economy. And that there has to be some coalition or coalescence between the two. So what are your investors, what are your clients telling you about what's happening in the real economy?
I think what you're seeing in the economy is an enormous snapback, particularly in those developed countries where vaccination rates are fairly high and vaccine availability is high. And you're seeing an enormous snapback. I mean, we can't forget the kind of dislocation we had. I mean, seldom, if ever, has the world economy ever been kind of curtailed the way it was on such short notice as it was last year. So you're seeing that snapback, and but you're also seeing a fair amount of dislocation because of it. All these shortages, some of them you've been through this before, so I'm actually optimistic about the economy. It's just really a question of the timing of it, and I think that's what the Fed is thinking about.
I want to talk about zero emissions and the investment strategies around it and the announcements that you've been making about it. It's very difficult to put in place a comprehensive and coherent zero emissions ESG policy at the moment when there is such uncertainty.
I think that's right, but this is a long-term issue that, first of all, must be solved, and secondly, requires actions today that will lead to that kind of problem solving. And notwithstanding the uncertainty we have today, there's steps that need to be taken. There's a lot of attention on this now from virtually the entire world community, but it's going to take a mobilization of capital that we haven't really seen before.
But when you say you want zero emissions in assets by 2050, that's a long goal. I mean, but well, actually maybe not that far off. But does that start now? And how does that translate in real investment decisions? Firstly, whether you don't invest in those in fossil fuel industries, but then they've got to get capital somewhere. And secondly, how deep are you prepared to go into companies to find out the companies you invest in, to find out their environmental and emissions record?
Well, I think from an individual investor's perspective, let's just use us as an example. I mean, we're not telling companies what they need to do, but we're very long-term investors. So we want to make sure that these companies actually are taking into account the need to get to net zero, and that we understand the steps that management and board are taking to do so. In many cases, that actually doesn't involve, in fact, very few cases that involve us divesting. It's actually getting a better understanding of what these companies are doing.
Very glad that you came along, sir. Please let's talk again as the year moves on, and we find out we can compare notes, if you like, about how when tapering is on its direction. Thank you, sir. I appreciate it.
Thank you, Richard.